Hey, how's everybody doing? I am Scot Wingo, CEO of Spiffy. Thanks to Tim and company for having me today, and I'm glad I have a relatively easy to pronounce name, so it's one of my strong suits, if you will. So at Spiffy, we are disrupting the car care experience. Even pre-COVID, you didn't wake up and say, wow, I'm really looking forward to getting my oil changed today, dealing with a tire, or going to the dealer or wherever it is you go to take care of your car. A little bit about me. I am the CEO and co-founder. I'm a serial entrepreneur here in Research Triangle Park, North Carolina. This is my fourth startup. So the most interesting one that kind of led to Spiffy is called Channel Advisor. I started Channel Advisor 2001, went public in 2013. Channel Advisor allows retailers and brands to sell across marketplaces and in the e-commerce sphere. So what we're doing is we're bringing those e-commerce DNA, if you will, to the car care industry. I'm really excited about that because we've seen consumer goods go digital, if you will, and we are going to see services go digital. So I had previously bought a car wash as just a side investment while building Channel Advisor, and had my first Uber experience in 2011. And that was the light bulb moment where I said, if services go digital, that space is twice the size of consumer goods, and it's going to go faster than e-commerce because e-commerce has already laid all the framework needed to have digital services. We have smartphones, digital payments, etc. The other big trend that we ride here at Spiffy is the convenience-oriented consumer. That was the thing pre-COVID. COVID's accelerated this. In the world of e-commerce, we've had 3 years of adoption in 3 months. In digital services, I think we've gotten kind of 5 years. And then the other trend is auto services. An example of this, for example, is Carvana. They've seen a similar acceleration to their business. The other thing we talk about a lot at Spiffy that I won't have time to talk about, but we can talk about in Q&A or the networking session, is the car is set to change more in the next 10 years than it has in the last 120 years. I'm a big Tesla enthusiast. They just had a battery day. We have a lot going on in the world of cars that benefits Spiffy. So here at Spiffy, we have 3 growth levers that I'll just hit on very quickly. We have geographic expansion. We started in Raleigh-Durham, and now we've expanded into 24 markets. Our goal is to get into 50 markets. We use that number because that's where Amazon can get to 80% of their Prime customers with a service called Prime Now. We're expanding services. We started with car washing and detail. We've added oil change, and now we're piloting tires. And we think there's 6 or 7 other services we can provide in any metro area to really provide that take care of my car for me, I don't want to deal with it experience that consumers are craving. And then the one I do want to spend a little time on is how the company has been built over time. We just launched an app and to experiment, and what we discovered is when you give consumers an app, they love having their car washed at work. So 80% of what we do at Spiffy is fleet or B2B, 20% is consumer. Pre-COVID, the bulk of that is office parks. So we go to office parks and service consumers. COVID has obviously kind of put that on pause for, I think, next year or so. I do think people will come back to offices. So we're using more residential services for consumer. It's a pretty small part of what we do. Then we introduced oil change in 2017, and that really lit up the fleet business for us. Part of our DNA, I should mention, is that we're as eco-friendly as possible. So when we wash a vehicle, be it a consumer vehicle at home, an office, or we do a fleet vehicle, we recycle 100% of the water using a system that we've developed. The other thing that's really core to Spiffy is we are not a 1099 marketplaces. We decided early on that Amazon has this right. If you really want to own the customer experience, you have to kind of start at the customer and work backwards. The customer doesn't want a random 1099 person that is ununiformed and untrained showing up and messing around with their car. They want a complete, insured, trained, uniformed W-2 experience. So that's what we deliver. I like to call it a full stack experience. We've totally vertically integrated the consumer experience. But 80% of our business is fleets, and a large chunk of that is rental car companies. We work with the likes of Carvana. U-Haul is a big customer of ours. So it's a lot like an enterprise software experience where we have an entry point, and that's usually wash or oil change, and then we add other services as illustrated here. Here's the cities that we're in. Our plan is to get into 50 cities. Now, one of the things the pandemic did for us is give us time to work on franchising. So we've just announced franchising. And the way it's going to work is if there's a pyramid of cities, we're going to do owned and operated in the top 50 cities. And then the next 200 cities will be where we have franchising available. Here's some examples of our fleet customers. I'm getting the hook, so I will wrap up quickly. We put all this together because we made that decision early on to have employees and leased vans. We need to keep those as busy as possible. So by having these 3 lines of business, it allows us to optimize the business. And just to give you an idea of results, last year we did $8 million in top line revenue. This year we'll do 14. Next year we are working on a Series B. We'll do 20 to 30 million, and then in 2022 this business can grow very quickly. We've got the bulk of the investment behind us, so it's largely geographic and service expansion, which we're really dialed in on. We'll get to a $60 million outcome, but we'll exit 2022 at about a $100 million run rate, and we think that's a huge valuation creation event. With that, I will turn it over to any questions.
Perfect timing. I was about to cut you off, but great timing here. So yeah, first question from Aaron Clayton. Do you deal with parts, and who manufactures these parts, if so?
Yeah, we do. So when we do car washing, there's a bunch of chemicals. Our core chemical provider there is called Simonize. Fun story, they actually have a huge line of disinfectants because they also do janitorial supplies for hospitals. That was one of the things that really saved our bacon during COVID, is taking those hospital-grade disinfectants and applying them to our fleet and consumer services. For oil changes, one of our investors is called Mon Hummel, and they're the world's largest producer of filters. So that's where we get our oil filters. We also have Shell Oil as an investor, and that's where we get our oil. For other auto parts, we do work with some of the stores. AutoZone, we do their fleet, so we have an affinity for them, and we do try to source most of the parts from AutoZone.
Perfect, quick answer. And here's another question from David Burton. Was the raise and at what valuation? I think that was a previous slide, but I forgot. It would be nice.
Yeah, so the post money on our previous round was just north of 35 million.
Got it. So I don't have any more questions either.